Okay, this video is about the multidimensional model. Fundamentally, the standard business report model is a multidimensional model. This will help you understand a little bit more detail about these standard business report model. So, models are basically communications tools. They provide a framework for understanding things. The multidimensional model, you work with the multidimensional model every day. This is just going to be an overview. So again, a model, conceptual model, electronic spreadsheet. It has rows and columns and cells and spreadsheets and workbooks. This is how you interact with an electronic spreadsheet. You use common terms that they relate to a paper-based spreadsheet. And yeah, that's just the idea, is that models help you understand. So you work with models every day. Most things are inherently multidimensional. Not everything, but most things. Financial information is absolutely multidimensional. You have a fact, say $1,000. It was reported by some economic entity. It was reported per some scenario. It's either actual, budgeted, forecast. It relates to some period. It relates to some business segment. It relates to some geographic area, or maybe class of stock or debt instrument or instrument. Financial information is inherently multidimensional. You may be familiar with the business intelligence dimensional model. The SBRM model and the XBRL model are a little bit different, but very much the same. BI has some limitations. We're not trying to duplicate what BI is. I mean, BI is a fine tool for doing BI, but what we're trying to communicate here is a dimensional model that does not force you to use OLAP. And I'm not going to go into any detail. I'll do that at another time. So fundamentally, these are the pieces of the multidimensional model. You have facts, you have aspects that help you distinguish one fact from another fact. Facts have values. Facts can be combined into a set. You can have assertions that further describe the relationships between a fact, and I want to communicate the notion of granularity or grain. So to do that, we'll start first by looking at something that is not dimensional. So the value pi is a scalar. Pi, 3.14, is the same all the time. It never changes. So a scalar is basically a fact that has no characteristics. It stands on its own. So here, a fact, here we have two fact values, 2,000 and 1,000, but you don't really know much information about those numbers. They're facts of what. So you use aspects to characterize the facts, and we'll get to that next. But a fact can be number, it can be text, it can be prose, and it's just something that someone reports information that's provided in a report, usually about the financial position and financial condition of an economic entity for financial reports, financial statements. So an aspect describes a fact. It's a property of a fact. An aspect provides information necessary to describe a fact and distinguish one fact from another fact. A fact can have one or many distinguishing aspects. Characteristic is a synonym for aspect. So here you see two facts. You see the two numbers we provided before. We're now giving you the concept aspect. revenues and net income, so you have a little bit more information. But this is still not enough information to really distinguish the facts is to the point where we need to work with them. So you have many aspects. What is the reporting entity? What is the legal entity of the reporting entity? What is the calendar period? What is the concept? So here you see multiple aspects. So again, a fact can have one value and multiple aspects. So the fact value, again, we said it can be text, numeric, or prose. If it's numeric, you need additional information to understand the fact value. So if it's numeric, you need to know what the units are. Is it US dollars, or is it euros, or is it yen, or some other currency? And what is the rounding? Is it rounded to thousands, millions, billions? This is information that might be obvious to you, but a computer needs this information explicitly in order to work with the information. Multiple facts form a fact set. So a fact set is a set of facts that go together for some specific reason. All the facts in the fact set share the same common aspects. So basically they form a table or a square, like you see, or a rectangle, as you see above. So what you see above is you see 3 facts. Each of them is outlined in red. And you see one fact set, which is outlined in green. An assertion is the same thing as a rule. A rule and an assertion are the same thing. They're synonyms. Rules guide, control, suggest, influence behavior. Without rules, you have anarchy. If you don't have rules, people can do what they want. So you have rules to control what people do. So for example, the accounting equation, assets equals liabilities plus equity, is a rule, and it controls the relationship between information in an accounting system. Here you have, so let's see what's going on. We have 3 facts. They're about the revenues of an economic entity, ABC company, and one fact is the total revenue, and the 2 other facts are the breakdown of North America and South America, and there's a rule that says that total North America plus total South America equals the combined revenue for all geographic areas. That's what a rule or an assertion does. Grain or granularity is the level of depth of information. So if you can imagine an accounting system, the actual transaction itself is the lowest level of granularity, and the highest level of granularity is, say, the line item on a balance sheet. And you can have intermediate levels of granularity within a report. I think this is pretty straightforward. So that's really the introduction that I want to provide for the multidimensional model. This is more to help you just understand that information is represented multidimensionally, and then layer upon layer, I'm going to explain this stuff better and better and help you understand how digital financial reports work.